Hello and welcome to Desert Jewels. This is our first episode, and on here we're going to be giving you information that's related to real estate to help you be able to make sound, informed decisions. So, our first episode today is going to be the do's and don'ts of refinancing, and we have with us today Andre Wieczkowski, the loan officer, a local loan officer here in El Paso, Texas, with Loan Depot. So, Andre, let me take this moment to say hello and thank you for coming on.
Good morning.
Good morning. Okay, and so Andre, I need you to answer a few questions for me so people will know you didn't just start doing this last night. So, how long have you been a loan officer?
Actually, licensed loan officer since 2013, but I started as a loan officer's assistant back in 2008.
So, you've been doing this for where we at 12 years of
Just about.
experience. And one thing I want to point out is because I'm a military relocation professional, I wanted to link up with somebody that was able to assist with originating loans. I hope I'm saying that right. Originating loans across the United States. And Andre, you're one of those people. Can you tell us some more about Loan Depot?
As far as Loan Depot, we're the nation's second largest retail lender. We have amazing technology. I mean, as far as our loan process compared to other mortgage companies, it's entirely seamless. We try to make things as easy as possible. Our turn times are great. Not so much now during COVID, but that's everybody. But as far as we go, we're licensed in every single state. And essentially, like for example, for me, I have family that lives in other states. I have clients that live in other states. And essentially what happens is I'll set up the loan and then I'll send it over to somebody local and they complete it.
Okay, because I know you've done this for family members for us. I I don't know if you remember the Montagues where you were helping them relocate from Ohio, and they were told multiple times by other loan officers, no, this can't be done. They were relocating to Texas, and I connected them with Andre. And Andre, I think you got them closed in like 30 days after they had been told no, they couldn't even get the loan.
The Montagues, they were relocating, yes, from Ohio to Mansfield, Texas. We closed them, I want to say, in about 28 days. It was relatively easy. Yeah, there was bumps along the way, but no mortgage is perfect, hands down. No mortgage experience is perfect. There's always bumps along the road. And I mean, we did get them closed. Most people said no. I said, yes, I got it done.
And he got it done. Another reason I wanted to introduce Andre is because, like I said, this is one of my go-to lenders. I had a client that was referred to me from church family over in Germany, and Andre was able to get their loan process to where all they had to do, if I remember correctly, they came in town just in time to do their final walkthrough and close. Can you talk about how it's possible for you to process a loan even when the person is out of the country and relocating back to the States?
That's where our technology comes in. We have consumer portal where everything's done electronically. Basically, everything's done via e-signatures except for closing. Because when it comes to closing, you need original documents, original wet signatures. And again, that's where our consumer portal comes into play. Essentially, what I do is I put together a needs list and I send the request over to the applicants, and they literally can scan the documents that I need via PDF, and then they can pick exactly which bucket to actually put in those documents because it's linked right to it. And then it automatically tags them and throws them in our file electronically.
Oh, wow. Okay. So that segues into refinancing. So if you are watching this anywhere in the United States, it's two territories or overseas, please know that Loan Depot, Andre Wieczkowski at Loan Depot is able to assist you with even getting refinanced, and you do not have to be here in El Paso, Texas. Okay, so Andre, explain to us what's going on with this refinancing boom. Just I'm going to go ahead and turn this over to you. I see where we're going to start with refinancing today. Go ahead.
As far as refinancing goes, I mean, the boom is insane. When COVID hit, the stock market took a giant, you know what? I'm not going to say that, but as far as it goes, the actual rates, they did jump up to like 6% for about 2 weeks. And then all of a sudden, just like when the bubble popped back in 2008, it dropped all the way down to 3 or sub 3. And everybody and their brother took advantage of that refinance. And in all honesty, a normal mortgage market, as far as what trades out on the bond markets and things of that nature, is in the neighborhood of somewhere between two and $4 trillion. And it's gotten such an influx this year alone that we're triple and even quadruple that. So the mortgage market is to the point where you're talking anywhere from 12 to $15 trillion, to the point where Fannie Mae and Freddie Mac, those two government sponsored enterprises that actually provide the money for lenders to loan, they're having to actually increase interest rates, believe it or not, because they're running out of money. It's to that point where, as far as refinances go, it's insane. Most people are somewhere between, I want to say, 40 to 60 days on processing refinances.
Okay, so, and with refinancing, can you go through the steps of what refinancing looks like? Like, okay, I do the application to refi, and then what happens after you receive my application?
All right. Essentially, what happens after the application is submitted, I go through, I review the credit, make sure that there's no derogatories or anything of that nature. If there is, and we need to address those, we do that at that point in time. Of course, then it's just like when you purchase a home. I send out a needs list as far as documents I need. I can do that via email. I can do that over the phone. I can do that through consumer portal. And then essentially I collect those documents. They all get submitted to the loan. And once I've got everything I need, then I'll disclose the loan, get the disclosures out. And once disclosures are signed, the loan goes to processing and into initial underwrite most of the time. And once it comes out of initial underwrite, then what we'll do is we'll see what conditions we need. We get your appraisal ordered. And the appraisal is an out-of-pocket cost. There's not much I can do about that. For FHA and conventional, the appraisal cost is $550. For VA in Texas is $500, and New Mexico is $600. By the way, I'm dual licensed Texas and New Mexico. And essentially, once the appraisal comes back and we've collected final conditions, then we go back to underwriting for final approval and the clear to close. And then once we've got our clear to close, what'll happen is, of course, closing documents get sent to the title company. We set up a date and time for you to go to the title company to sign, or have the title company come to you, depending on if you're using an out-of-town title company. And then once that happens, the loan's signed. If it's your primary residence, there's a 3-day waiting period. So a 3-day right of rescission from the date that you close. So say, for example, you close on Monday, the loan cannot fund till Thursday. Okay. And then
That
once
gives me
that
a
happens,
chance to say I don't want to do this anymore. Is that what you meant by right of rescission?
correct, if they get cold feet and they feel like they don't want to do it. And essentially what happens once it funds, like say, for example, we close, say the first part of, we're in October now. Say, for example, we close on the 1st of November. Your first payment's not due till January.
Wow. That's 45 plus days. That's 60
in the
days.
neighborhood of 60 days. Like say, for example, we were to close on the 2nd, your first payment wouldn't be due until January 1st. So you're looking at 61 days without a payment.
And that's perfect timing for the holiday seasons and ordering online. So now that you've told us how the process works, I remember having this conversation with you. I need you to explain to us, how do you all calculate the cash out value? So, because I know some people say, well, my home is worth this, so I should be able to walk away with this much money in my hand. So will you explain the calculation of the cash out, or how you get the cash out amount?
Okay. So as far as it works when it comes to refinancing and taking cash out, the only type of refinance that we offer as far as cash out goes in the state of Texas is a conventional Texas A6 on primary residences. On any secondary or investment property, it's just a standard cash out refinance. Okay. With Texas A6, we have limited fees that we can assess, as well as it all depends on the value of your home. Like right now with COVID restrictions on primary residencies, all we can do is use 70% of whatever the home is appraised at. So say, for example, your home is appraised, we'll say 200,000. The most that we can actually use on the refinance, plus give you cash back and cover closing costs and your escrows, is $140,000. Okay. So that's if the home appraises at 200,000. Now, if the home appraises low, it changes. Like say, for example, it were to only appraise at 100,000, the most that we would be able to use for everything included would be $70,000.
Okay, see, easy round numbers. Okay, and then explain how the VA, you said VA interest rate reduction refinancing. Explain that, how the VA interest rate reduction program works.
Okay, any type of refinance that you do with, when it comes to VA, unless you're doing a VA renovation loan, it's considered an interest rate reduction loan. Okay. And that's whether you can do a limited IRRRL, which is you really don't have an appraisal, and there's limited income, and it's basically you qualify based off of what you originally bought the home at, or we do what's called a full IRRRL. And what happens is there's a full appraisal, all documentation, full credit pull, everything. And essentially sometimes the interest rates are better with the full IRRRL versus going through and doing the limited, because the limited, it's a larger risk for the company.
Okay, and explain to me okay, if I purchase my home with a VA back loan and I want to do the cash out option, is this in Texas? Is it just in Texas, in New Mexico, or is it like nationwide where VA has to refinance differently if they want to do the cash out portion?
As far as taking cash out in the state of Texas, if you're doing a cash out on your primary residence, the only type of cash out that you can do is a Texas A6. Okay. And that's a conventional loan. Now, and these are state requirements. These aren't nationwide requirements. Each state is different. For example, in New Mexico, you can do a VA cash out, but here in Texas, it's going to be a conventional loan.
I have to switch my loan over to conventional.
Correct.
And how long would I have to stay conventional before I can go back to VA?
A minimum of 6 months, 180 days.
Okay. So it's doable. It's just some moving around has to take place.
Exactly.
This is a lot of information. So if you want like one-on-one need time with Andre, we're going to post his information so you can see how to get in touch with him, and he will sit down and have this conversation with you. Andre is our personal loan officer. We met him after, were you number 13 or number, yeah, you were either number 12. 13 or 14. We talked to that many loan officers trying to get approved to purchase our home. And he was the one that provided us the information that we needed to be able to correct our credit to be able to qualify for our home loan. So this is why I trust him. And he didn't charge me anything. He took the time and talked to me multiple times to get us through the process and give us the right information. So Andre, we're at the do's and don'ts, but I want you to start at the don'ts, because I think a lot of times we don't understand what we should not do. We hear do, but we don't pay attention to don't do. So let's start with what we should not do if we're in the process of refinancing.
Okay. So, and that's honestly where I always start at as well, is you don't make any major purchases, none whatsoever, that involve your credit, period. Like I tell everybody when I first start my refinances, or even purchases for that fact, is until this transaction is complete, your credit belongs to me. And I know how threatening that sounds, but there's a reason for it. My thing is to get you approved for the loan and keep you in the home. If you go and do something outside of that, there's no guarantees, one, that the loan will close, and two, that I'll be able to keep you in that home. Okay. Now, you don't want to apply for any type of new credit or open any new accounts. If you're opening a bank account, that's fine. That's not a credit check. If you're opening a credit card, don't do it. It's that simple. You don't want to close any credit card accounts because, believe it or not, if you pay off a credit card and you close it, that can hurt you.
Wait, right there. This was something that I learned when I got with you, when you were helping us, because I just knew if you pay it off, you close it out. But we talked about this the other day. Can you explain to me why I can't just pay off a credit card and close it, and why it might not be a good idea to pay it all the way off?
The reason you don't want to pay it all the way off is you want to show that you're utilizing that credit responsibly. If you're not showing utilization responsibly, then it hurts you. I mean, ultimately, a huge impact of your credit score is actually utilizing credit responsibly. And when you show no utilization whatsoever, you're hurting yourself. You're not helping yourself. And I mean, that's exactly where my next point comes in at. You don't want to max out or overcharge any of your credit cards, because if you do, as soon as you hit 78% of the allowable balance, so say, for example, you've got $1,000 limit, you hit $780 maxed out. And that in itself, you're talking 15, 20, 30 points. And I mean, it's a huge swing when you max out a credit card. And the more utilization you have, the worse it gets. Realistically, you want to keep your utilization somewhere between 10 to 19%. Me personally, I recommend the lower of that. I say 10%. And I've sent out numerous credit simulators to Julie as well. And I've shown this is if you keep it right around 10%, it's going to be the most beneficial for you. If you pay it off to zero every month, eventually your credit file is just going to freeze and you're not going to see any type of movement. It'll say, for example, you got a 750, you're going to stay at 750 no matter what if you pay that thing off every single month.
Wow. See, and this is why Andre's the go-to, because he'll sit down and explain to you, and the simulator. When you sat us down and you showed us, like, this is what will happen when you pay this down to this point. Is what will happen if you pay this off. Now I think you're at move money around without first contact. Don't do that. Don't move any money around. Explain that.
Okay, say for example, you've got $250,000 in your mattress at home because you don't trust banks. And then all of a sudden you decide to throw that in the bank during the purchase process or even refinance process. Then I've got to explain where it came from. And at that point, we go into nauseating detail, and it's going to feel very, very, very invasive. And most people get turned off by that. And yes, I've gotten yelled at about it. But the thing is, it's my job. I can't say, oh, well, she just had it or he just had it in his mattress at home. Everybody's going to want to know where the underwriter's going to want to know. And Fannie Mae, Freddie Mac, or Ginnie Mae, depending on who purchases the actual mortgage on the secondary market, is going to want to know where that money came from and if it's documentable. And the thing is, we literally have to document every single cent.
Wow.
So, I mean, if you're say, for example, you make $25,000 a month and you're pulling out $15,000 a month and you're leaving that in your mattress at home, I can show that, yes, you're pulling out $15,000 a month and storing it at a safe at home or under the mattress or in the box spring, whatever the case may be. And as long as I can prove where the money came from, then we're fine. But if I can't prove it, I hate to say it, that just like the court saying goes, it's fruit of the poisonous tree. Can't touch it.
Oh, wow. Okay, you got on here that we can't change banks or open new bank accounts.
Now, as far as that goes, like say, for example, you go from Chase to Bank of America. Then we've got to show the money leaving Chase, going into Bank of America. And if the deposits don't match up, we've got an issue. Now, if you stay with Chase and you open a new Chase checking account and you're simply moving money between your two Chase accounts, we're fine. But if you actually change banks and close one out, at that point, it becomes a problem.
Okay, see, all right. Oh, and I remember this. Okay, the new loan on cars and a lease, I'm just leasing it. I'm not even getting the $80,000 Maserati. I'm just going to lease it. I don't see where there is a problem with that.
It makes no difference. Whether you're leasing or you're purchasing it, as far as the lease goes, there's still an open trade line on your credit report. Not only is it an open trade credit line, but at the same time, it's a new monthly payment that has to be figured into your debt to income ratios.
Debt to income ratio. Can you define that? Because even when I've talked to clients prior to bringing them to you or other loan officers, they're like, debt to income, and you explain it. Break it down, Mickey Mouse style.
Easiest way to do it is, okay, say for example, you've got a car payment, a mortgage, and we'll say, I don't know, a credit card payment. All three of those payments together total up to say $500, but your gross monthly income is $1,000. Divide that 500 by the 1,000 and you've got 50%. That's how we figure your debt to income ratio.
So what I got coming in minus what I got going out, and what percent of what has come in has left out.
The easiest way to do it is it's your gross income. Okay. You get your gross income. So before taxes, okay, you divide that by your total number or total payment amount. Okay. So it's the 500 divided by the 1,000, you got 50%. There's your debt to income ratio.
Okay. You just touched on making the large deposit. So now we're on what can we do when we're refinancing?
Always make your mortgage payment. No matter what your loan officer says, you always, and I can't stress it enough, make your mortgage payment. It was probably about 2 or 3 years ago. I did have a refinance I was doing, and they thought it was a good idea not to make their mortgage payment because we were closing before the 15th of the next month. And of course, again, this is one of our pet peeves is we have to make sure that the buyers are continuing making their monthly mortgage payments. If there's an excess number of payments or the old mortgage company gets more money than they're supposed to, they will refund you. Okay. Yes, I understand it's another payment you didn't want to make. However, whatever the overage is, you will get that back within 30 days. Because the thing is, if you don't make your mortgage payment, you've got a mortgage late, and that just disqualified you for the next 12 months.
Wow. Okay. So same thing, continue to stay current on even our other debts, and then work for the same employer. So just like with purchasing a home, even when you're refinancing, don't change jobs until we close.
Correct. Because if you do change jobs, it's going to delay us by a minimum of 30 days. And the reason I say by a minimum of 30 days, even if you're in the same industry, making more money, we need at least 30 days worth of paycheck stubs to prove that that's why you actually made the change. And we need to see that we need to see at least a month worth to show, well, look, this is why this person made the change. It has to be justifiable. If, for example, you decide, or let me rephrase that. If you get fed up with working at Lowe's and decide to go flip burgers at Burger King, that's not the same industry. Guess what? We're done. Nothing I can do.
Wow. How long would I have to be on my new job outside of the previous industry before we can revisit this?
It depends on the loan. With conventional and FHA, they typically want to see 6 to 12 months. With VA, you're talking probably in the neighborhood of same thing, 6 to 12 months. It just depends. Okay, at that point, it really becomes an underwriter call, and it just depends on what they say.
Okay, and you said contact loan consultant with any questions. So there's no such thing. Well, since I've been with you, I've learned there's really no such thing as a dumb question. If you don't know, just ask.
Exactly. And I say this all the time till I'm blue in the face. There's no such thing as a stupid question in the mortgage industry. I mean, even though you might feel dumb asking it, or I might think that you're dumb asking it, but if you don't know, the only way you can get an answer is if you ask. And if you don't ask, you'll never know.
Well, thank you for making this first episode so informative. I wanted to make sure I started out with where we need to start outside of hiring me as your realtor. I wanted to be able to connect you with a um, knowledgeable, patient, willing to work with you, whatever your situation is, loan officer. Um, like I said, Andre, after talking to 12 or 13 other loan officers, he actually sat down knee to knee with us and explained to us what needs to be done for our home purchase. And he's the same way when it comes to refinancing. He will walk you through and help you see whether or not refinancing is right for you right now, because you may have a better interest rate than. So you want to have that conversation. If you need to talk to Andre, you see his phone number here at 915-867-7811, and just reach out to him by text or phone call. You can also email him at Wieczkowski@loandepot.com. So thank you again, Andre. I appreciate it. And until next time, see you.
Not a problem.